5, 4, 3, 2, 1.
Bitcoin and cryptos across the board are pulling back to a key moving average that we see during a bull cycle as a confirmation of a bull cycle. Is Bitcoin due for its first substantial pullback over the last few months? And if so, what is the target for that? And more importantly, the entire cryptocurrency market cap for only the second time in the last 3 years is facing a test of this golden pocket Fibonacci retracement here. What must the entire cryptocurrency market cap hold for this to continue, guys? And is this going to be the absolute beginning, the disbelief pullback as we enter the hope, optimism, belief stage of the psychology cheat sheet? And as well, 4 of the top 5 cryptocurrencies that have increased in the last 24 hours are coins that we are holding and have talked about specifically over the past few months. We're going to get into more detail about these cryptocurrencies. And guys, the RSI repeating what it did in 2016, a bull market confirmed. But in the short term, Bitcoin options open interest nears all-time highs, which could actually predate a drop in prices. We're gonna show you exactly what our pullback target is for Bitcoin on these charts. And huge major banking crisis coming fast. We're gonna be talking about that because, guys, this might be one of the best times in history to absolutely exit fiat and either enter cryptocurrency, silver, or gold, basically anything except fiat. Wow, what's going on, everyone? Welcome back to an extremely Friday webisode. We have a lot to delve into today with Bitcoin's price because, guys, we are now on the verge of some very, very key technical levels for Bitcoin. And if this is the scenario, we have a lot of information to delve into in regards to what I'm doing, especially with so many opportunities that are about to present themselves on this market. Various altcoins have been exploding still. For example, OMG, one of the coins in my top % crypto portfolio, has been exploding as well. But something more interesting has been happening on a lot of these other top altcoins that Bitcoin is also doing, which is a key signal in Bitcoin breakouts, Bitcoin bull markets, and that we have to be paying attention to. And as well, the entire cryptocurrency market as a whole is doing something especially key right now. So we're gonna be talking about that as well. So guys, huge, if you're new to the channel, make sure to hit that like, subscribe, turn on post notifications so you get updated when we post. And as well, drop your comment to win this ledger. We'll be picking one of the winners at the end of today's webisode, but as well, make sure to drop your comment for these giveaways. And without any further ado, let's jump in. Guys, so one of the key things we're seeing on this chart is a very similar pattern that we see on the psychology of a market cycle, this disbelief pump, but there is always this pullback which really further accentuates that disbelief that a lot of people feel, right? So currently we're trading above 11,000 US dollars per Bitcoin, but a drop below 11,000 I'm sure will shake some people out and will further add to their bias of potentially being in a disbelief rally. For anybody that's been in this market for the past 2.5 years, basically all you've known is shakeouts. Basically all you've known is fake outs, right? We go on nice little runs every once in a while and we get pulled back to some key levels, but there's some very key long-term signals that we're going to be looking at today that absolutely cement why things have changed, but why a pullback may be extremely necessary here in the very, very short term and may actually be one of the best opportunities to get in to this market, and particularly some of these altcoins, before we continue exploding. So if we start in the entire cryptocurrency market cap, we are now for the second time in the past 3 years in this golden pocket. The first time we were in it is when we topped out back in the summer of 2019. We were barely, as you can see, we barely spent any time in this, less than a few days only actually. And now we've been actually trading within here since the beginning of this month, like August 1st, right? So for the past 3 weeks, we've been trading in this key area, but you can see now we're currently getting a little bit of a pullback, and it looks as though maybe this is the beginning of a more short-term correction, which is 100% necessary in this market. So one of the key things that you notice in bull markets is the 21-day moving average being an exceptionally important indicator of short-term momentum and how the market is swinging. So you can see during this rally of all of 2016 and 17, we were basically finding support atop this 21 blue day moving average you can see here. However, what you still do notice is with these explosive runs, for example, $22 billion market cap to $70 billion market cap for the first time in crypto's history, we still did get pullbacks down to this 21-day moving average and even below it. That was a pretty substantial pullback, right? From 70 billion all the way down to 46 billion. Then we go from 160 billion all the way back to 80 billion, pretty much a 50% pullback in the time span of only a few weeks. And then you notice in a bear market, it's the exact opposite. This 21-day moving average is resistance, right? when we break it, we pretty much immediately fall back underneath it, and you see that happened and repeated basically for the past 2.5 years. Now, for the most part, ever since April, we've been hugging above this 21-day, and for many reasons, this does signal of a more bullish market. But you can see here, specifically the last few weeks of July and the beginning of August, we got very far away from this 21-day moving average. You can see it here. We pumped from about 260 all the way up to almost 400 billion, and actually getting very near 400 billion just in the last few days. But you can see how overextended we've become from this 21-day moving average. And with that as well, we're at a key level, this golden pocket of the past 2.5 years. You can see the swing high being about almost 800 billion US dollars, with the low of the market being under 100 billion US dollars. So this is a huge level to break. And guys, this coincides basically with Bitcoin's $12,000 to $14,000 price. And we see this 21-day acting as a pullback for so many coins, right? We have XTZ doing it. We have Link right now very much topping right on this $13 mark, which is exactly where its 21-day moving average is. We have Ethereum, same exact thing, the 21-day moving average here. So this is repeating on all of the charts. So many of these altcoins have absolutely exploded past their 21-day moving average. So it makes a lot of sense now that we're coming back to touch this. But what's most key right now is that we find support at or even slightly below temporarily this 21-day moving average before heading higher. That is the differentiation between a bull and bear cycle in many ways. And guys, with that being said, we're still holding support on this ascending triangle for Bitcoin, but admittedly, it does look like the pressure wants to push us down. We've obviously seen a lot of pullbacks to that 21-day moving average and some exhaustion in this market, as obviously so many prices have gone up exponentially over the past few weeks. So many altcoins have been blowing up. But ultimately, our pullback area for Bitcoin is going to be, we mainly just want to hold that 10.5K area. That's going to be the main thing we want to hold. 10.5 is horizontal resistance that we faced for an entire year. And when we absolutely broke out of it, that's when the parabolic run actually started with Bitcoin and a lot of altcoins. It's also where Bitcoin's 50-day moving average is right here, right around 10.5. Right underneath 10.5 is also exactly where the golden pocket for Bitcoin's retracement is over the last 2.5 years. So right slightly above 10,000 US dollars. And this ascending support of this ascending channel actually looks, though, if we break through this, guys, then it does look like the most necessary and likely if we do get a substantial pullback. You know, if we break 11.5 and 11.6, 10.5 obviously is going to be a big area. And it's also pretty much exactly where the 7-year support for Bitcoin lies. Okay, this 7-year support is a very big macro indicator for Bitcoin. This thing goes back 7 years, so clearly there's a lot of data if we pull back there. There's so much going on with that. So 10.5, in my opinion, would be the perfect pullback area before continuing this rally. I think 10.5 would be amazing. Even dipping all the way down, you know, slightly below 10K, I think could be fine. And if you look on these more long-term charts, if we've got a more substantial pullback and still want to remain bullish, even going all the way down to about 9,000 US dollars, which is also where the 21 weekly moving average is, which is the most powerful moving average in my opinion. The 21 day is extremely important, but the 21 week I think is much more crucial on these macro timeframes here. And that has us potentially all the way down to 9.5. But guys, a retest out of these breakouts, as we've said before, coming back is totally natural. And we have not seen that yet. It's still likely that we will see that pullback, but it's still just as possible that we continue rallying from here. I think it would be a lot more healthy if we did get that pullback. And if we bounce from those levels, it is an ultimate confirmation about this actual rally. If we look at that market psychology cheat sheet, this disbelief is one of the most crucial areas in a chart. Because what it does is validate for people who think this is the disbelief phase, meaning we're about to enter a very bullish cycle. What it does is confirm that we actually are, and it gives so much more confidence to the market, and it enables us to enter these other phases such as hope, optimism, belief, thrill, euphoria, right? We need this confirmation here where we get a pullback and we get that confirmation. Even people that are extremely bullish want to see that confirmation, because what it means is that after a pullback, we get support at levels that we absolutely believe we need to get support at. And that gives us the confidence to actually push these prices much, much, much higher. Pullbacks to key levels actually build confidence as opposed to making confidence weaken. And it is still completely unknown just how much this banking crisis is going to affect Bitcoin, silver, gold. So far it's been pumping. You know, all of those assets have been going extremely bullish. But it's still kind of unknown just how much it's going to be affected, right? The Fed and Treasury taking over the banking system, ? Fed and Treasury helicopter fake money direct to people to avoid mass rioting. Not a time to think about. But the question is, how much gold, silver, and Bitcoin do you have, guys? Because all of this fake money is just getting thrown into the economy. What are the long-term effects of this, right? We're at the very first few months of this really happening in excess. But really, what is the long-term consequence of doing this. Really, nobody knows 100% just how much the economy is going to be affected by this. Most people who are educated in the space will say, though, it's not good for the economy. Obviously, just printing loads and loads of money. And that is why you see investment firms and CEOs just talking about getting into Bitcoin, getting into gold. Even Warren Buffett, right, getting more into gold. Absolutely insane, because they know what is coming. They know what is most likely to come, but to be honest, nobody knows 100% just how drastic it's going to get. In the intervening period since March, when macro assets crashed en masse, both Bitcoin and precious metals have seen huge gains, fueled by the US dollar index hitting its lowest in 2 years. And guys, current behavior mimics that of previous halving cycles, 2012, 16, and now 2020, both seeing solid RSI scores accompany a price run shortly after the halving event itself. But the reason this time is different is that we have a global crisis in our economy going on right now. 2012 was relatively healthy for the economy. 2016, relatively healthy. If you look at the GDP, you look at unemployment, you look at the stats economically across the board, we are in much rougher shape than we've been in the last 10 years since Bitcoin has existed. I don't think there's a person on this planet, whether you like Bitcoin or not, I don't think there's a person on this planet that is confident right now in the US currency, and a lot of other countries' currencies as well. I don't think a lot of people are very confident in fiat in general. Bitcoin has diverged from safe haven gold over the past 2 weeks, but one theory neatly explains why both assets have performed so well. The US dollar has weakened. According to the US dollar currency index, a more significant collapse may be near. While open positions in Bitcoin options have risen to near record level highs, it's not necessarily a good thing for those hoping for the rally to continue in the short term, however. So, with cryptocurrency, gold, and silver most likely being some of the best bets over the next few months and years, in the short term, it is possible that Bitcoin is getting that pullback that we're talking about on those charts to really even out some of the explosiveness. Guys, even in the most bullish scenarios, markets do not go straight up forever. There are pullbacks. Granted, in bull markets, the pullbacks are not nearly as drastic and prolonged as they are in bear markets, but it is not a bad thing at all that we may be beginning a pullback over the next week or so. So many people have been crying from the rooftops about not being able to get into certain altcoins or even Bitcoin over the past few months because they've missed out on some insane gains. Even in the top 10 cryptocurrencies, some of them have absolutely exploded. For example, Chainlink, right, from about $4 to $20 in a very short amount of time. But if you sense fear in the market and if you see the prices going down, that is exactly when money is made, right? When you sense that fear, when you think, wow, these assets might go down a lot more, that is exactly when the people that are making the money during the runs are buying, right? That is exactly when they're putting positions into those coins. And guys, for example, the top coins in the last 24 hours, OMG, 0x, Ampleforth, Quantum, Icon as well. 4 out of the 5, the only one not being Icon, 4 out of these 5 are coins that we either hold or have talked about on this channel. Quantum specifically I've mentioned about 5 different times on the channel. 0x and OMG actually account for some very top positions in my portfolio. Ampleforth we discussed in a video just a few days ago on our top microcap coins. And Icon, that is one we didn't talk about at all. That is one I don't hold at all. So yeah, missed out on that one, but 4 out of the 5 top 24-hour gainers today is pretty good. And guys, massive, is Litecoin actually setting up for a nice pump here? We have a Litecoin USD long with the Litecoin pairing here on Coinbase with the idea that we're actually going to see a pump for Litecoin, which I wouldn't be surprised, roughly up to about $90 per Litecoin, which I wouldn't be surprised because Litecoin has been getting pretty crushed over the last few months. It really hasn't made any substantial moves. Litecoin is a coin that's been around nearly as long as Bitcoin, especially compared to some of these coins that have only been around for a year or two. And there most likely is a pump coming for Litecoin, probably after this pullback. But ultimately, guys, we need to wait for this break because clearly Bitcoin has still not actually confirmed this and broken out of this. So guys, huge. If you want to learn charting trading, if you want to follow our portfolio, if you just want to follow some of our updates here and our private Telegram, just enter the code millions at checkout to get 15% off. We will be ending the sale soon here. And as well, I just wanted to address something when it comes to trading and leverage trading specifically. Guys, first of all, you should never be leverage trading unless you're experienced with trading in general. And to be honest, I actually used to be against leverage trading as well, but there are 2 reasons why my opinion changed on that. One, the people that I used to think were just taking advantage of people on YouTube or on Twitter and other sites where they have big followings by getting people to sign up with their leverage trading links. I used to be under the impression that the only reason people did that is to get everybody to sign up, put their money in, maybe lose a trade, and then the people, pushing out those links made some nice money. Guys, one of the key things is that the people that are pushing out the links benefit a million times more if the people that are trading are successful. For two reasons. If you're successful, you're going to make more profit, you're going to make the affiliates more money as well, and if you're constantly losing on trades, you're most likely going to stop, again, which is not something people that are pushing their affiliate links want to happen. So it is in everyone's best interest for people to actually be making money and not making bad trades when it comes to these affiliate links, when it comes to leverage trading. It is a million times more beneficial if you're actually doing well. And again, that's why people recommend, if you're not good at trading or if you don't trade at all, definitely just don't even sign up with these leverage links to begin with, right? So at the end of the day, it's 100% your choice. If you have experience, if you're confident, if you want to delve in to leverage trading, that's why people advertise those links. But the affiliates advertising the links really are not benefiting too much from preying on people who are not experienced at trading. You know, say you put $100 in and you lose it, that doesn't benefit anyone. It obviously doesn't benefit the person who trades and loses it, but it's really not benefiting the people that are pushing out the links or the affiliates either. So I just wanted to clarify that a little bit, because it really is not in anyone's benefit to use an affiliate link and lose trades, guys. Nobody wants to see that happen, and nobody makes money from that either, right? It doesn't really help anyone. So if you know how to trade and you're interested in using leverage, that's why we offer those links below. And actually ending in 2 days, the competition on this channel only when you sign up with the link, with the prizes of 0.1 Bitcoin, a Bybit branded Ledger Nano X, and as well some Bybit clothing. That is going to be ending tomorrow. All you have to do to enter is actually deposit 0.05 Bitcoin. You don't even have to trade with it, but to enter in the next 2 days only, before it's over in 2 days, to enter all you have to do is deposit that 0.05 Bitcoin.